Hello, welcome. Good morning, good afternoon, good evening, anything in between. Thank you very much for joining us here today. My name is Peter, and with my colleague Gianluca, on behalf of EVPA, we're very happy to have you here with us today for what will be an exciting, a quick and informative session. And we've got some real experts on the line. And it's really exciting for us as well, because for EVPA, this marks the kickoff or the coming out party for our work on catalytic capital. We've been working in this space for years in different ways, but this marks the start of a new project, a new journey over the next 12 months with our support of our friends at the Catalytic Capital Consortium, and also, quite excitingly, alongside our sister organisations globally as well. So the idea for this session will be to hopefully teach you something you didn't know before, or spark your interest on a Monday, but also really to get you involved and excited and wanting to be part of the activities we've got coming up throughout the year as well. So hopefully be an enjoyable session. I'm not going to spend too long on a starting housekeeping, but I am just going to ask our panelists and lead speakers to briefly introduce themselves. And what we'll do is we'll start with Frank from AVPA. And I don't want to sound like a radio DJ or anything, but if you could just maybe mention who you are, where you're calling from, and maybe a highlight from the weekend, that would be great in the next 20 seconds, and we'll just pop around the panel as well. Over to you, Frank.
Hi, Peter. Thank you so much. And to the audience, thank you for making time to join us today. My name is Frank Aswani. I'm the CEO of AVPA. I'm dialing in from Johannesburg, South Africa. You might not know this, but we experienced terrible winters in South Africa. This weekend, it hit almost 0 degrees centigrade at night. So it's pretty cold. That's why you can see I'm wearing a warm sweater. Nice being here.
Fantastic. And for once, that's great. Normally, I'm talking to my colleagues around the world from tropical climes. I feel better now. And maybe, Sangeetha, would you like to just say hello?
And I think I'm one of your colleagues from the tropical climates, because it's not been cold at all over here. Hi, I'm Sangeetha Watson from AVPN, from the Knowledge and Insights team, a project manager on it. What I do is I support a lot of the content development, whether that's like research work or curriculum development on the AVPN Academy, which I'll say a little bit more later, because it also kind of something that we're going to be leveraging for the work that we're doing with C3. But I'm dialing in from Singapore, where it is quite warm, but it is later on in the day, and you'd expect that it will be cooler, but it really isn't. So it's still, my AC is on.
Tough times. Yeah, thank you. And last but not least, Carolina.
Good morning. I'm here from Latin America. Good afternoon, Peter, Gianluca, and all EVPA team. Good evening for Sangeetha. Thank you for organizing this webinar. It is always a pleasure to share with you and our sister networks. I am the CEO of Latimpacto, a Latin American social investment network, sister of EVPA, AVPN, and AVPA. And I am so glad to be here. This webinar is particularly special because we show the value that we create worldwide to improve and leverage impact, providing knowledge and connections across capital providers interested in improving the impact they can make with the resources. I'm based in Bogota. It's tropical, but I'm cold. I'm here with my blanket. I'm a heater. Latimpacto, the hub of Latimpacto is located in Colombia, and from here we cover the whole region from Mexico to La Patagonia, which team also located in Mexico, Brazil, and Chile. So I'm so glad to be here with you and share in this amazing webinar what we want to achieve with this partnership. Thank you, Peter.
Fantastic. And also Carolina's dog's also asleep behind us, so hopefully we'll get a fun moment later when it wakes up.
That's right.
And I just wanted to also mention the team here at EVPA. So as mentioned, Gianluca and myself are on the call today, but we can't claim all the credit. I mean, we probably will, but we're part of a much bigger team here at EVPA as we look to work over the next 12 months. So you will see some of these people, you will know some of them already. If you don't, you may get emails or you'll meet them on the journey over the next 12 months. But are now Alessia, Isabel, and Ben are also part of the team. And really, what we just want to do here is show that this is something we're going to really try and support over the next 12 months as well. So look forward to having you join us with that. I won't bore you with any of my weekend, and won't ask Gianluca to introduce himself because he'll be joining us in 2 seconds. Once I get through the agenda piece. As you'll know, having joined a lot of webinars by now, these things normally overrun. We've learned we don't put timings next to what the agenda says, but the plan is to set the scene very briefly, also to put this into context for our European audience, what we think of Catalytic Capital and where it sits for us, before a quick journey around the globe, really, to Bogota, Johannesburg and Singapore, to get a view of where we are at the moment in Catalytic Capital. And also some insights of where we could go with it as well. And that's where we're going to focus on the second part around fostering growth. And we'll also take a little bit of time just to share who the Catalytic Capital Consortium are and what their role in all of this is, before moving on to the real meat of it, which is the global program we have coming up over the next 12 months and how you guys can get involved. And then we'll move into a Q&A at the end. One last bit of housekeeping. Basically, you'll have all been on quite a few webinars, but because tech companies hate us and don't want us to be happy, all the interfaces are slightly different on every single one. This one is GoToWebinar. So on the right-hand side, hopefully, you'll have had a control panel pop up when you joined, and you'll see words such as questions or polls or chat there. If you click within chat, for example, you'll be able to communicate with the rest of the audience as well. Please do share your questions there. We'll be picking those up later in the session. Also, if we do overrun, we will endeavour to answer them if we don't get a chance in the session and follow up by email. And so that's our kind of running order for the day. Now I'm just going to hand over to my colleague Gianluca to just really set the scene for us on Catalytic Capital and Europe. Over to you, Gianluca.
Thank you very much, Peter, for this welcome and introduction. It's a pleasure to be here. Good morning, good good evening, and good afternoon, everyone. Since I don't know where you're joining in from, in the next 5 minutes, my role is, before we dive into these global discussions with the speakers, is to briefly introduce the concept of catalytic capital and ensure that everyone is on the same page to contribute to the debate and the discussion and the conversation of today. So I'll kick off by starting from the definition of catalytic capital, and let's look at it together. So catalytic capital is defined as a subset of impact investing that addresses capital gaps left by mainstream capital in pursuit of impact for people and planet that otherwise could not be achieved. Catalytic capital accepts disproportionate risk and or concessionary return to generate positive impact and enable third-party investment that otherwise would not be possible. And please note that I've highlighted some of the key elements that are included in this definition, such as the part on capital gaps, so really filling those gaps that are left by the mainstream market, as well as generating impact that otherwise could not be achieved. And also the disproportionate risk and or concessionary return nature of the capital that really shows its flexibility, and finally the mobilization part of the definition, which comes with the enabling third-party investments that otherwise wouldn't not happened. But let's also try to give a bit more of a practical touch of what catalytic capital is, because catalytic capital has always been around us and played an important role to develop societal solutions that work at scale. But we have lacked a common understanding and a strong recognition of this type of capital. And let's start from a first and well-noted example of the Grameen Bank, founded by Mohamed Yunus, that started testing a new lending model that targeted poor individuals that would have not managed to access financial services otherwise. And thanks to the Grameen highly risk and also highly impactful, potentially impactful lending model, microfinance was born, and it grew up and it attracted a lot of third-party investment. If you consider that nowadays the microfinance sector is estimated to serve more than 130 million people with a total portfolio of $124 billion. And this is according to the Microfinance Barometer. And this type of funding that the Grameen and funding model that the Grameen Bank started developing back in the days, it has all the elements that we touched upon in the definition. So it has the disproportionate risk, as well as the strong impact that would have not happened otherwise, as well as this third-party investment that was then attracted in the sector. Another case that I would like to showcase, as we're EVPA, and we are the European Venture Philanthropy Association, and we are the European-based network, let's say, sister organization, is that I would like to touch upon is the case of the support that was provided by iCare, an engaged grant-making organizations based in the UK, to SHIFO Foundation. SHIFO developed a hybrid technology to collect health information in emerging contexts with a focus on child and maternity. The technology really had a disruptive potential, and the financial and non-financial support provided by CARE was really from the very early stages, and has always been very critical to develop track records and to attract follow-on funders and partners that will really help them scale their solutions. And currently, SHIFO is on a successful scaling trajectory because it now operates in 8 countries in Africa, Asia, and Latin America, and it collaborates with ministries of health and with leading and non-governmental organizations such as ActionAid and Global Fund. But what is important in this case is to recognize the role that iCare, a small, again, very engaged investors that was there since the very early stage, played in developing track records and attracting follow-on funding. But why do we think this matters? So why are we engaging as also global network in this conversation? And the simple answer is that we are in urgent needs for more resources deployed in a catalytic way to develop the solutions that we urgently need to tackle the global challenges that we're facing nowadays and change the world for the better. And how do we plan to do this is, first of all, by clarifying what investing catalytically means to an investor. Then we need to prove and dive with the practitioners to really understand and prove the added value of catalytic capital, also focusing and highlighting on what happens when catalytic capital is not there to create this sense of urgency. And last but not least, we need to provide examples, to provide knowledge, and to showcase investment opportunities to deploy and mobilize more resources deployed catalytically. I'd like just to conclude with a couple of slides that shows the situation in Europe. And for us, we believe this work on catalytic capital is very timely, because in a couple of years ago, EVPA has been bringing forward this narrative that stresses the importance of all the strategies along the spectrum of capital, but especially stresses the importance of those high-risk taking, impact-centered, and long-term oriented strategy that we refer to with the term investing for impact. And for us, the connection between these two concepts, investing for impact and catalytic capital, is clear. But obviously, we are aware that this is our understanding. This is just a starting point, and this is how we see it. And we are just at the start, and we really want to engage with you to understand better how does these two terms relate to each other. And again, this is just a starting point. So what I'm showing you now is how we think of catalytic capital, but all of this needs to be further discussed with practitioners and with experts to validate hypotheses. And yeah, briefly, this is the spectrum of capital that EVPA came up with. You can see it covers all the spectrum of investment strategies. It goes from traditional grant making to sustainable and responsible investing. And what we observe is really an overlap between the traditional definition of catalytic capital let's say in the US context, that was, let's say, not including grants so far. But it also, what is important for us is that we want to include grants also in the picture, because for us, grants are an important financial instrument that can be a strong catalytic effect. And I think this is also a great opportunity for the whole consortium and for the whole partners involved in the project to really refine a bit the understanding of catalytic capital globally and come up with a strong and common global understanding of what catalytic capital is. And last but not least, I'd like to also show you that this is really relevant from our members, and we know that because we have already surveyed them in January at the beginning of this year to understand how much of them were already deploying catalytic capital. And what I think is very interesting to observe in this figure is that a huge portion of our members, 38%, already consider themselves as catalytic capital providers, meaning that they already have and see the similarities between these two concepts I was telling before. But also what is also important is that there's a also non-neglectable percentage of practitioners and members that don't actually know whether their capital is catalytic. So there's a knowledge gap that we really want to tackle with this project. And I've finished my boring introduction, and now I hope we are all at the same page. But now I'd like to, before we open up for the conversation with the speakers, just hear quickly from you. And I'd like to ask to take your phone and either use the QR code or join on slido.com and use the code and answer to this question, which I think is also relevant to understand a bit how the audience thinks about catalytic capital. And the question is, do you have enough access to the knowledge, skills, and experience necessary to deploy catalytic capital? And obviously, the answers can go from too much knowledge to about right to too little knowledge, as well as I do not deploy capital because we might have online organization and people that don't actually represent investors or any type of capital provider. So that's also an option. So I see people started voting. So I see we have 18 people so far, 20. So maybe I can wait until we reach 30 and then we can see the results. And I saw also Peter appearing at some point. I don't know whether he wanted to say something. So now let's look at the results. We have 24 respondents, 27. Okay, let's see. So there seems to be a good fair amount of people that thinks that we have enough knowledge to deploy catalytic capital, as well as obviously not capital providers also online. That was expected, but again, a third of you thinks that there is too little knowledge for practitioners to know how to deploy catalytic capital. So that's the kind of gap that we want to fill today. So without further ado, I'd like to now move to the next part that was introduced by Peter before, and now it's really the time to hear from our speakers. So I'd like to start from Frank, actually. Peter, yes. We cannot hear you, I think, or at least I couldn't.
I was just going to say, ironically, the reason I popped up a minute ago was due to my technological incompetence, and then I forgot to unmute myself in order to say that. So that works well. And also, just because we're just since I went off script by going with Frank first last time, I thought we'd reverse it this time and start with Carolina to come backwards. So over to Carolina.
Thank you, Peter. Thank you. As I mentioned before, I am CEO of the Latimpacto, the Latin American Social Investment Network, sister of EVPA, AVPN, and AVPA. Latimpacto, just for those that is new, this organization for you, was legally established in April 2020 after 2 years of due diligence. We opened our membership program on June 2021, so 13 months ago, and today we gathered more than 140 members. And we count with an incredible team located in Brazil, Chile, Mexico, and Colombia, where I'm located. And following the role model of our sister networks, Latimpacto acts as an ecosystem builder to increase the flow of capital towards impact, ensuring that resources are more effectively deployed. We do it by providing knowledge and improving connections for our members, and it is because this a partnership with the C3 and to improve the catalytic capital use is very important with us. As you mentioned, Gianluca, Arnaud, and Gianluca, sorry, following the role model of EVPA, we approach social investment across the continuum of capital, in which corporates, grant-making foundations, investment funds, investors, social investors can achieve a more profound impact within the portfolio of projects. I invite you to know more about Latimpacto on our webpage, latimpacto.org. And now let me focus on the Catalytic Capital and the C3 partnership. I want to second what Gianluca mentioned about the immense value of this partnership with the C3 and how we will work with our sister networks. I want to say three particular reasons that we provide, that we believe in these partnerships. First, because this alliance aligns 100% with our purpose. We aim to mobilize more capital towards impact, as Peter and Gianluca mentioned. Second, it is a partnership that gathers the sister networks for the first time. So we are so glad to work with our sister networks. We will work together with Europe, Asia, and Africa to ensure and leverage the understanding and investment of more catalytic capital. With this survey that you show, we are completely aware that we need more catalytic capital to unlock access to capital and strengthen enterprises and communities. And finally, but not least, is that we are sure that this partnership is an opportunity to strengthen the connections and investments and to motivate more investors and philanthropists from Latin America and from other parts of the world to be encouraged to invest more catalytic capital. So I want to thank C3 for trusting Latimpacto and all our colleagues at EVPA, AVPN, and AVPA for being part of this family journey. We are sure that this alliance will result in incredible experiences for all the organizations and individuals that are part of our networks. So thank you very much, Peter. And I will continue later with the current state of the Catalytic Capital, or do you want that I continue now? Please let me know.
Oh, I think as we're doing so well with
continue?
Yes, please do.
Okay. Okay. I'm following the questions that you sent me. So you asked me about to share the current state of catalytic capital in Latin America. So I think we are not very different from when you show with Europe. We in Latin America, catalytic capital faces two fundamental challenges to gain relevance and scale. First, awareness gaps limit catalytic capital's ability to take off. We also undertook a similar survey a year ago, and we found that 50% of survey entities showed a better understanding of how catalytic capital works in the first place. And second, we found that insufficient codification leads to limited replicability of best practices. 42% of investors surveyed indicated a need to generate intelligence on local applications of catalytic capital as a means to mobilize greater volumes of investments. They were not aware of any cases of catalytic capital deployment in the region, so it's something that we need to work with more detail. We are sure that not addressing these challenges hinders the ability of new funders and financiers or allocators to coordinate and direct capital flows effectively, particularly to key development areas facing critical underinvestment, such as climate action. That is one of our committed practices that we are working with Latimpacto. Paradoxically, most of the world's catalytic capital has been deployed and tested in Latin America. However, most cases are not reported. So it's something that we need to continue strengthening with our network. Key trends emerging from Latimpacto's community of practice discussions, which include foundations, family offices, impact funds, and corporate social investors, confirm this point. First, there is a clear need for increased volumes of social committed investment and financing across the region, with such resource mobilizations being essential to achieve the sustainability development goals. A majority of deals engaged in the region are neither bankable nor investment ready, and when are funded, are not capitalized to a sufficient degree of scale. Third, philanthropic and catalytic funding specifically remains subscale, limiting its impact when acting in isolation. We need to develop a culture of trust in order to enable more hybrid or blended finance vehicles. Scaling, we are sure that scaling the use of catalytic capital is more urgent than ever in a region facing unprecedented socioeconomic crisis, as well as a massive financing gap to address critical social, environmental, and economic development objectives. Latin America faces a huge public investment gap to achieve the SDGs, and the figure is likely to grow, and only a small share of this gap is addressed, and even less so locally and with private capital at scale. According to an analysis by Andy, a majority of investment activity in Latin America has come from outside the region, with only 26% of capital and 33% of deals coming from impact investors headquartered in Latin America. The same study stated that most deals in the same period of time were for tickets of under $500,000 US. Nevertheless, isolated success stand out. Let me show one case, as you mentioned before, one of your cases. Roots Capital, they finance a small farmers lending program, and they have mobilized more than almost 12 million over the last 2 years to agribusiness across Latin America deemed too small or too risky for other lenders. A relatively modest capital support 1 million in outcome payments from the Swiss Agency for Development and the Cooperation and EIDB Lab. There is an urgent need for more examples like this one, and there is not shortage of innovative, high potential impact solutions in the regions. So we are sure that we need this capital. Numerous climate tech companies need catalytic capital to support their new ideas into proven solutions to protect the Amazon jungle's biodiversity or to protect sustainable coffee plantations. So in light of these opportunities, Latimpacto is uniquely positioned to work along C3 and bring learning opportunities and trigger the mobilization of catalytic capital in the region. And please let me share here in the chat the case of Roots of Capital, and you can find other 37 cases that we systematized by Latimpacto. So happy to continue this conversation with you.
Fantastic. Thank you, Carolina. And now just going to hop over to Sangeetha for the view from AVPN. And you'll be pleased to know, as I mentioned at the start, we are running late, but we will have a Q&A at the end. So please do also put any questions or thoughts in the chat as well, and we will come back to those as well. But now over to Sangeetha.
Thanks, Peter, and thank you so much for that context, both from Gianluca and Carolina. I think we share many of the same sort of challenges and also the opportunities, so I'm excited for this conversation. Just before we kick off, since I haven't had a chance to talk a little bit about AVPN, without saying too much, I'll say, very similar structure. We have around 600 members across 32 markets, and similar to what my colleagues have said before, our mission is to move capital towards impact across Asia by providing social investors with opportunities to connect with stakeholders across various sectors and markets to learn from one another and find opportunities for action. And so this particular partnership with C3 is, hitting it right on the head for us. And I think if I have to sort of dive into the context and why this conversation is so important for us right now, the best place for me to start really is about our global conference that we just had and just hosted about 2 weeks ago. It was our first global conference since 2019, not the first global conference since 2019. And we saw 1,100 social investors gather in Bali, Indonesia to discuss various themes, approaches and solutions. And we had the opportunity to dedicate a session to catalytic capital. We've of course been discussing the catalytic value of philanthropy for years, and the speakers acknowledged that everyone wants to think of their investment as being catalytic, right? But this was an opportunity for us to really unpack what catalytic capital is and how it's already been taking shape in the region. Some key, really high-level takeaways on why philanthropy or private wealth holders should be catalytic. Philanthropy is the rarest form of capital and investment, but has a key role to play in driving investment towards scalable solutions. It is flexible funding, it can back new mechanisms in emerging markets, and develop the much-needed proofs of concept to bring in a wider variety of investors. And there was a very clear call to action from this session, which saw, I want to say, about like 200 people that were in session discussing this. And the clear call to action was, how can we enable all social investors to really take on that catalytic lens in deploying their capital and in the way that they look at their opportunities? So coming from this session and this conversation that we were able to have and to sort of introduce the term to our audience, let's scale back a little bit and think about Asia Pacific, right? And the kind of context within which we are discussing this. So Asia Pacific now has the fastest growing population of ultra high net worth individuals than any other continent in the world, right? According to Knight Frank's 2022 Wealth Report, between 2016 to 2021, so in the span of 5 years, the number of ultra high net worth individuals almost doubled in Asia, and more than doubled at a rate of 125% in Australasia. So as wealth grows, we're realizing that this is not being met with an equal or proportionate increase in giving and social investment. And so, you know, just for some context, Asia has only 1/3 of the social investors that the US or Europe has, despite having a population 4 times more than the combined population of the latter. So there's a strong sense that, you know, we have to do better and we can do better. There's much more potential for this. And so with these gaps in mind and these opportunities in mind, our goal is to support private wealth holders to be bolder with their capital, particularly those who are new to the space of what it means to be catalytic in deploying their capital, right? And so there's sort of 3 kind of core sort of enabling factors or trends that I wanted to highlight here. The first being that Asian governments are demonstrating a commitment to partner with private and philanthropic investors on innovative financing structures. And, you know, I can say Japan, I can talk about Indonesia, but I really wanted to highlight Indonesia in this instance, where really there's a strong sense that blended finance, for one, is moving from policy to practice. So in Indonesia, we've seen the launch of the Tri-Hita Karan THK roadmap for blended finance, which was launched under the leadership of the Indonesian government and the OECD in 2018. And this is such a strong evidence of Indonesia's commitment to leverage, you know, blended finance principles to meet its development targets. And it also launched the SDG Indonesia One platform at the same time, which aims to channel public and private funds through a fourfold approach that includes development fund and equity fund and de-risking and financing facilities. So governments are beginning to show their sort of commitment to this and how they can start to create an enabling environment for private investors and private funders to start to step in the gap and to partner with the public sector. And then as next generation, we're also seeing that the next generation philanthropists are starting to take the helm of their family's work. And there's this growing sense of like this new wealth that is starting to shape the social investment landscape in Asia in a major way. And these guys, these people, they're really expressing a keen interest in exploring innovative ways to deploy capital more efficiently and effectively. I wanted to pull out this one example of Ish Tolaram Foundation, which is the philanthropic arm of Tolaram Group, a 73-year-old business with operations in Asia, Africa, and Europe. So really spanning, you know, all major geographies. And well, specific to their work in Singapore, they focus on providing grants to scale the impact of programs that provide access to quality education and skills training to underserved individuals. And unlike a traditional funder-grantee relationship, they embark on a journey with these organizations in the long term to co-create solutions, explore avenues beyond funding, enhance awareness around the core issue. And now the foundation is beginning to explore how they can apply their capital more effectively to create impact. And they're learning about tools like social finance and impact investing. And these are exactly the kind of people that we want to be talking to over the course of you know, our partnership with C3 and our sister networks to kind of understand what are the enablers, what are the challenges that they are facing. But it's exactly foundations like this, right? And then the third sort of key trend that we're seeing is that social investors in Asia are willing and able to explore a wide variety of different tools and approaches, including outcomes-based instruments like impact bonds. You know, we're seeing social impact bonds, development impact bonds, like the Quality Education India, DIB, or a WASH Development Impact Bond by the Stone Family Foundation in Cambodia. So really looking at many different thematic areas. We're seeing impact loans and social impact guarantees. So we're seeing a lot of innovation in this space. With a multitude of different sort of partners coming together to drive these sort of different tools and approaches. And before I kind of close off, I wanted to highlight a couple of examples that we're seeing that are really bringing across all these sort of principles and trends to head, right? One is the example of Anchor Capital, which is a finance-first, India-based venture capital fund, which has demonstrably been ahead of the curve, right? Investing in deep tech and health solutions in India. Having received a $7.5 million program-related equity investment from C3, they were able to invest in tech-driven businesses and demonstrate the potential of promising but unproven companies that can create market access, increase incomes, address structural challenges that disproportionately limit economic opportunity amongst low-income consumers. Another example is RS Group, which is a Hong Kong-based family office. It migrated its portfolio from a traditional allocation to 100% impact alignment over just 5 years. And most recently, they have launched an Asia Natural Capital Design Funding Window. That's a mouthful, with Convergence Blended Finance in 2021. And the idea is to provide funding for grantees to conduct feasibility studies and proof of concepts for blended finance solutions in Asia, with a focus on supporting upstream solutions that protect natural ecosystems and resources. So it's clear, right? Investors are pioneering solutions in Asia, and there's so many exciting things happening here, and there's so much room for cross-learning from Asia to the other regions. And so on that note, I'm going to hand it over to you, Peter.
Fantastic, thank you. And I think you can see already the passion and the excitement for everyone is wonderful, and it's quite infectious, but it's a bit of a nightmare if you're the host and looking at the timings all the time. So I'm now going to hand over to our colleague Frank to share a little bit of context from the African continent even, and then we'll move on into the plans of what we're actually going to do over the coming 12 months. Over to you, Frank.
Yeah, Peter, thank you. And to Carolina and Sangeeta, thank you for your very detailed explanation of what's happening in the regions. I'll be a bit brief because from an intro perspective, we as AVP are very similar to what AVPN and Latimpacto do, and EVPA as well in their respective regions. We are about mobilizing capital for impact. We are the youngest cousin in the network, in the family of networks that you're listening to today. We have offices in Nairobi, and that's where our headquarters are, and offices in Johannesburg and in Lagos. This whole space that we're trying to catalyze is very new, but I believe is most needed in this part of the world where, as you know, Africa suffers probably the biggest deficit of SDG financing globally. But also for me, what's most exciting and what makes my job really cool to do is we are arguably the biggest impact opportunity in the world. I think what was traditionally seen as challenges in Africa are fantastic impact opportunities for people to come and try new models and new products, new services. And if all of this stuff can work in Africa, they'll work potentially anywhere else in the world. So with regards to that, I'll move on to just talking a bit about the state of catalytic capital in Africa. In summary, it's very nascent, very untested, especially when you think about how it's deployed in supporting SMEs, especially high impact SMEs on the continent. There's very little deliberate adoption and planning around use of catalytic capital. Whereas if you look at some of the big ticket items in the $100 million and above, the use of things like blended finance in Africa is very well known, very well documented. Markets like Kenya are arguably one of the largest blended finance markets in the world. But when it comes to where we really need it, on the ground supporting high impact social entrepreneurs, that is almost non-existent in many places. Or if it's there, it's predominantly done by the foreign organizations or foreign investors. One of the things that we want to do with this program is to try and see how we can increase the adoption and embracing of catalytic investment and catalytic capital by local African institutions, and how we can especially use that available catalytic capital to stimulate local private capital into the impact space. So that's one of the biggest challenges we are facing. I mean, and in the context of all of that, one of the joys of trying to do this in Africa is that in many places, innovation precedes regulation in Africa. So we've got a bit more room to be innovative, to try new markets, new products, new models, new innovations. because in many cases, the innovation tends to come and wrap around itself around the innovation. So case in point, if you look at what's happened with the likes of M-Pesa or Zipline, most of those preceded regulation, and regulation has come to then use these market leaders to then kind of frame what the regulatory environment would look like. So as an innovator in Africa, you really are a trendsetter in many ways. And as we think about why this is important for us, and I'll talk about this a bit later, but we're in desperate need to try different ways of mobilizing capital because we are falling behind on our SDGs. Our SMEs are struggling for financing, and we need to find ways of trying to de-risk some of our social investments so we can crowd in private capital on the bigger scheme of things. But this is something I'll talk about a bit later. Peter, over back to you.
Thank you very much, Frank. You can tell it's the summer. My technology is starting to give up as well, which is nice. Maybe there's just too many webinars in the world. Thank you very much for that summary, and thank you to all our panelists for the summary. Our plan now is to throw even more information at you, but in a really quick way so that we can get to a Q&A towards the end of the session. And what we're going to do is just very quickly touch on the role of our partners here, which is the Catalytic Capital Consortium. And you may have heard us mentioning these guys who have been with us on the journey of the work we're doing. They are a partnership of 3 large American foundations who work globally and have had a track record in this space for many, many years in the terms of the MacArthur, Omidyar and Rockefeller foundations. And what they're looking to do is promote catalytic capital worldwide through a mixture of investment, and up to $150 million of that has already been deployed by MacArthur Foundation on a long-term patient capital basis. That's supported by grant making to build an ecosystem, and that's where our work is also sitting, and we find a lot of synergy with them. And a growing strategic communications approach over the coming months, and hopefully you'll start to see some of this on LinkedIn, but there will be a website in time as well. We will share all these slides, so I'm not going to go through all the information here, but this will be a takeaway for you. But to give you some idea of the work that they're doing, there's 4 different work streams. There's an evidence-based, an advancing practice work stream, and a fostering solutions and infrastructure. Those 3 are really trying to work out why and where catalytic capital can be deployed, and also try to help really get out the traps. And a lot of our work will be doing that, but also ourselves and our sister organizations are engaged as network partners for this program, which means we're really trying to help and build the practice both for experienced catalytic capital investors and support awareness buildings for those new into the sector. And so we do this alongside the other network partners, and it's really lovely to see impact networks coming together. So alongside ourselves, GIN, the Mission Investors Exchange, Tonic and Convergence are all involved in this effort. So hopefully it will be a really unanimous approach that you'll see across the way. We have far more information on our website, but we have far less minutes left in our webinar. So I just want to share that and say thank you to the Catalytic Capital Consortium before we move on to what the plans are over the coming months and how you can get involved with the work that we're doing. So I think at that point, I'll hand over to Gianluca to take us through the global plans. And oh, sorry, I think we're starting with Frank as well, are we not?
Yeah, let's start from Frank.
And so to put people on warnings, because we would like to get to the Q&A at the end of here, we've had some really good questions already. We're going to be a little bit strict and try and keep it to sort of 2 minutes or so on your plans. I wish I had one of the old-fashioned buzzers, but I'll find one. Over to you.
Yeah. So to the audience, this is kind of what we're thinking of doing. If you think about our approach, we really want to spend some time having people understand why this is important to us. And for that to happen, people need to understand the problem we're trying to solve. Africa is on course to meet only 2 of our 17 SDGs. Our annual SDG financing gap, as you can see, there's between $500 billion to $1.2 trillion annually. And that is on the back of declining aid and growing public debt. So our governments are taking on too much debt and aid is declining. So aid to Africa is something in the range of 50 billion, and our public tax collections are about 600. So we've got about 650 or so money pots of money available to us against a target of 1.2. So the only way we can fill that gap is through private investment. And for that to happen, we need to create a branding platform on this particular issue, so to make people aware that we can't depend on aid and government funding only anymore. We need to look for additional sources of capital. And in order to do that, we must also be talking to the private sector players to sell to them the significance of profit and purpose, and that coming to play in the SDG space is not a compromise. And the role of Catalytic Capital in unlocking that private capital and making these social investments viable is very important for us. So there's a lot of investment education we need to do. So on the activity side, we're going to go through a couple of steps. First of all, just sensitization webinars, which we'll do to create the business case for catalytic investment and why this is important. We're going to look at some of the, then going to the build phase, look at how do we customize curriculum to Africa, how we identify and build a catalytic capital community of practice composed of people across the continuum. And that's the job of working with this, the family of networks you're talking to today. We're uniquely positioned to bring together people providing grants, debt, or equity to the same platform, unlike many places where you find them in respective silos. And then we'll deliver training through master classes, which we're super excited and looking forward to do. We're also going to try and offer opportunities for people to learn by doing through catalytic pool funds and getting involved in those pool funds. Because the purpose of this process is to make sure that Africans and African investors learn how to be active players in structuring catalytic capital to suit their local investment needs. And part of that will be involve them, have them learn from people who've done this in other regions. And so we'll be counting on also being able to share and get lessons, not just from within Africa, but from outside, and working closely with the likes of Sangeeta and Carolina and Gianluca and Peter to make sure that the knowledge that comes out of the other networks is also brought into Africa and vice versa. So that at a very high level is kind of how our planning and thinking is looking like.
Thank you very much, Frank, for also keeping it short and to the point. Now I'd like to ask Sangeeta to elaborate a bit on the plans of AVPN.
Thank you. So first, of course, it's about understanding the landscape. And I think that is something that we are really excited to do through both desktop research and relying on in-depth conversations with private wealth holders, managers, intermediaries, and other key market and sector stakeholders to validate trends and assumptions as revealed in the desktop research. So that's where we will start. We really want to understand what the motivations are so that they can be effectively amplified and enabled, and what the barriers are, and what resources investors think that they need to be able to deploy this type of catalytic capital, whether that's about needing more information, knowing where to start, identifying partners, etc. And then we want to leverage content already developed by C3 and adapt that for the explicit needs of the private wealth holders and asset managers in Asia. Earlier, I mentioned that I mentioned the AVPN Academy, which is an online learning platform that we officially launched last year. It hosts video modules, live modules, larger group participation, learning circles for smaller group discussions, etc. So we're looking forward to developing specific content that can enable social investors to think more strategically about what makes their capital catalytic, and how they can begin or expand their journeys through online learning opportunities. And then finally, our third phase would be to do the cross-sharing that Frank just talked about with our sister organizations. So crystallizing these learnings into clear, actionable takeaways for the global community of social investors. So that will be about identifying thematic issues that are unique to each network, and then learning from cross-border members and relevant stakeholders on ways to mitigate knowledge and systemic gaps, and then also ideally identify potential opportunities for collaboration and partnerships to further the deployment of catalytic capital across borders and networks. So that's what we're excited to do. I hope that was brief.
Sure, thank you very much, Sangeeta. We really appreciate you also being very strict and to the point. So Carolina, now up to you for the plans of Latimpacto.
Thank you, Gianluca. And I think that we have shown here that we have together with our sister networks an immense challenge to improve the use of catalytic capital. And as you, Gianluca, Frank, and Sangeeta have presented, Latimpacto follows the same purpose with this partnership. So we are proposing an integral approach aimed at creating a path for social investors and philanthropists in the region that are eager to understand and mobilize catalytic capital. We plan to start with basic tools for a broader audience and build up more profound content for those organizations that show serious interest, and move forward with practical interventions that can lead to the actual mobilization of capital. So to achieve it, we followed a similar proposal of our sister networks to have a deepened understanding of catalytic capital and its use in specific sectors through specialized training for social investors. As I mentioned before, catalytic capital is a fairly new concept in Latin America. For that reason, we will develop material and train on catalytic capital, disseminating knowledge and learnings. We plan on relying mainly on the baseline curriculums provided by the AC3, and also reviewing the existing materials and working together with the organizations that have produced them. So the main focus of this work will be sure that these inputs are contextualized for the region, for Latin America. So the knowledge that we will offer is relevant and address the barriers that we are facing and that we have identified, such as lack of clarity around the concept of catalytic capital in the region and the lack of a unique term for the concept that is used across the markets. And our final output will be focused on catalyzed willingness to deploy catalytic funds through the development of technical skills in intermediaries and the identification of local deals in need of catalytic capital and their presentation to social investors. So we follow the same model that you are following as well. I'm happy to provide more information for those that are interested to invest in Latin America and to be part of this partnership that is worldwide. Thank you, Gianluca.
Thank you very much, Carolina, and I'll be very brief myself to showcase into you the plans that we have here in Europe as EVPA. So I won't touch upon the approach because I kind of already touched upon it during the setting the scene. But what I would like to stress here in this slide is that the plan of activities of EVPA are somehow divided in two. On the first part, we will dive with our practitioners, with our community. We will really try to gather data, knowledge, but also experience and validate hypotheses through the gatherings of a community of practice and through knowledge pool and peer exchange. So that will be the first part of the activities, and we really need your help there to help us really refine and shape the debate around catalytic capital. And then the EVPA Impact Week, which will be held in December, beginning of December this year, will kind of be the turning point of this initiative and plan, because that's where we will present the main insights and we will leverage them to actually attract other actors and engage with other actors beyond our communities, such as the policymakers, as well as financial actors from the mainstream finance that could be interested in deploying catalytic capital. So at the Impact Week, we will turn, let's say, the focus on the mobilization aspect of the initiative. And from that moment onwards, we will focus on refining a bit our understanding of catalytic capital, and we will publishing a white paper on that, and also on attracting and really trying to mobilize resources, catalytic capital resources. So it's now time to open up for what will be a short but interesting Q&A section. So I'll hand over to you, Peter, for maybe I've seen they've dropped the audience have dropped some questions. So maybe we can tackle one or two questions maximum before we actually wrap up and conclude.
Sounds great, and I thank you very much, Gianluca. And I think we're coming to some learnings here, that there's a lot that we could be doing here, and also something that could fill a 90-minute webinar, which you know, we learn as we go. So with that in mind, to move on to a Q&A, I'd just ask our panelists to possibly join us, Gianluca, Sangeeta, Frank, and Carolina on camera. And I think we had a number of questions come in from the audience. I think there's one here that's almost similar to one of the ones we pre-planned, so I'm going to steal it and use that, which is, in your view, what are the key outcomes of catalytic capital? That does sound like we wrote it, so I'm definitely keeping that. I don't know if anyone's got any immediate thoughts on
better understanding and to increase the deployment of catalytic funds. So I think there are the two issues: is understanding and deploy more catalytic capital worldwide. It's how we can support that, and it's part of our mission.
Mm.
I think in summary, Peter, is how do we accelerate the closing of the financing gaps? Because for me, that's a major part of what Catalytic Capital can do, is how can we accelerate and sustainably close some of the financing gaps we're facing?
Thank you. In our perspective, Catalytic Capital, it provides a set of instruments, right, to bridge a gap funding for impact organizations. At seed stage, an impact organization is usually bootstrapping. It's pulling together funding, grant resources from friends, family, others, and then at growth stage, it's able to accept Series A, Series B funding. But what happens in the middle, right? And that's where Catalytic Capital has the most potential. When you talk about issues like WASH, you're talking about multidimensional issues that require significant resources to address effectively. So where do impact organizations get the bandwidth and funding to do that, if not for Catalytic Capital investors? So I'm really excited to see, grant makers, investors step in the gap and begin to think about the impact their capital can have, right, in transforming the ecosystem for investment. Catalytic Capital, I believe, provides us a space and means to not only really understand the issue at hand, but also to understand the specific needs of the impact organization in responding to those needs, and then through the power of partnerships, drive change at scale.
And if my meeting still works, Gianluca, this is nice because I get to ask you.
I'll be brief. I'll be brief, Peter, but just echoing what others said, I think here the great opportunity and the key outcomes of Catalytic Capital is also to have an honest conversation about the issues that we're facing, as well as the capital we need to tackle them, and really fully, finally, exploit the synergies that are along the spectrum of capital, recognizing that not all the challenges we're facing can be solved with market rate investment that actually attracts market rate returns, but we need to be honest also in recognizing that some challenges might need some other types of mobilization that cannot always be the market driving solutions, but it's an opportunity to also collaborate and engage with other stakeholders such as governments and policymakers.
Cool. And I'm going to go slightly off piece here, and we might finish 2 minutes late, which is the cardinal rule never to break on these webinars, but it's summer and I'm feeling just like we'll go for it. Because there's a question here from the audience. I think it was Steve who mentioned it about saying, I'm interested in the impact assessment and about how one identifies a proposal as catalytic. If anyone can share their approach to this, I'd value receiving this information. So yeah, I think from my point of view, I'm also interested if someone's got this definition down, because I think this is something we're all searching with, but I don't know if anyone has any immediate thoughts on how you identify proposals.
Something that we do with our members that are part of our network. So we provide a close training to them and analysis of what they are doing. So happy to collaborate with our members and to have a deep understanding of what they are doing and how we can evaluate their type of capital. So it's part of what we do as networks, and how we can provide this knowledge and the support to them. It's like a coaching that we support to our members.
I think, Peter, the joys of Catalytic Capital also would allow us to test new ways of measuring impact. I mean, like, I know some people now who are testing and tracking patients who, whether they've got their second vaccination or not for COVID, using their cell phone numbers, because people will get one vaccination in one city and then go get another in another city, and you can't track them any other way apart from through their cell phone. So through heat maps, they're using that to track who's got their second and third vaccination. So that's the joy about this space, that the innovation we can try and test is just immense. And the power that this high risk grant capital, concession capital brings to the play is just significant. So this is there's just so much exciting stuff we can do.
And any other thoughts? It's not one of these panels where everyone has to speak, by the way, but just I don't want anyone to feel like they're not as well. That's because
I'll only say that I'll echo that, absolutely echo what Frank and Caroline have said, right? Because that's exactly what this is about. It's about trying to find out how people are doing it, how people are assessing it, and then can we come up with something, frameworks to be able to sort of standardize that in the way that we talk about it across regions, across impact areas, across the different work that's being done. But yeah, that's all I'll say. I think we're at the beginning of it, so it's exciting now, and maybe we'll have an answer for you towards the end.
Well, at this point, what I might do then is to say thank you very much to the panelists. We've got one more slide to share, which is just how you as an audience can get involved with this as we go forward, but especially within EVPA and the European piece. But hopefully, as part of the audience here today, you'll also see this is quite an exciting global mission opportunity program, working very closely with our sister organizations, which is, well, it's always a pleasure, but also it's also just very exciting to see it actually come together and happen. So if you have any questions for any of the panelists today, please do get in touch with us. We're very happy to put you in touch with them or their colleagues. Sometimes websites don't tell the whole story, so we're very happy to arrange a call with any of the panelists to hear more as well. So I was just going to say thank you to the panelists and then ask Gianluca to very quickly run us through the next steps and what we're going to do in practice going forwards. Gianluca, over to you.
Definitely, Peter. Thank you so much. So I think, first of all, it's important to understand why it is important to engage, and we think it's important for three main reasons. One, because we are already at the start of the journey, and some of the questions you also raised are questions we want to collectively tackle with our community of practitioners. So it's really exciting moment, let's say, to engage and also to shape the debate, because the conversation we will be having as well as the final outputs will really contribute to shaping the global debate on what catalytic capital is and also the different use cases of catalytic capital. And this conversation that we will have this year will have long-term effects, and the outcomes of this work will really understand and foster the learnings and the understanding of catalytic capital globally. So without further ado, I'll just conclude by telling you how you can engage if you are as excited as us in the topic. And first of all, we are launching through this webinar actually a call for interest to participate in our community of practice. So we will soon drop a link in the chat as well as in a follow-up email. You can just go through this very quick form, but really express your interest to be part of this community of practice. There will be a call for practical cases and keep you in the loop as you express, let's say, your interest in the topic by participating and registering to the webinar today. So there will also be a call for practical cases, and also we obviously invite you all to join the discussion on catalytic capital during our Impact Week, when it will be again the moment in which we will showcase the first insights as well as start planning the planning activities of 2023. So without losing more time, I want to thank again the speakers and all the panelists that are online, the audience that followed us. We were a bit over time, but don't hesitate to get out and reach out to us in case you have any follow-up questions or you would like to engage more in the topic. So thank you all very much for following the webinar, and thank you all speakers and panelists.
Thank you. Thank you very much for this invitation.
Thank you very much. Have a good day.
Thank you, everyone.
Bye-bye.